Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking currency futures, let's talk the euro. Been talking the euro a lot lately, but it's just a critical currency for what's been going on sort of in the surrounding fundamentals. And the euro just completed its sixth week up, its sixth consecutive week in a row. While we finished today only up under 0.25% on the rally today, we did end up as one of the larger, better performing weeks for the euro against the US dollar, as this entire week together was up 1.6%, with the high prices getting up above 125 and us settling really kind of in the middle of that 124.20 area there. So the ECB was part of the cause of it. We had an ECB meeting on Thursday, and it was probably the biggest individual economic event that market participants in the FX markets were looking at. And we ended that meeting with Mario Draghi being Mario Draghi. And what I mean by that is he essentially continued to play both sides of the fence in the face of very strong European economic data. We have German PMIs that are through the roof. Retail sales in the whole Eurozone are doing better. GDP is doing great. Prices are rising. But Mario Draghi continues to feel that there is accommodation needed, and they're not going to be removing accommodation anytime soon, even in the face of the ECB minutes from the December meeting, where it seemed like they discussed the possibility of changing the path of their bond buying program. Mario did not talk about that at all in this particular meeting in terms of changing it. What he did say was, even if they did change it, they would continue to keep rates low for well after, these are his words, well beyond the ending of the bond buying program. So continued to let the market know that they were going to be facilitating monetary openness throughout the Eurozone. And this got people actually buying the euro. It should be more euro in the market. They should sell off. But what this meant to the market was the strong economic data is going to continue, and they're going to force the ECB's hand. But this is Mario Draghi being Mario Draghi. He's very vague. He just doesn't want to address things directly because he doesn't want to have to go back on what he said at a prior meeting. We also had Trump weakening the US dollar. Well, I should say the Trump administration weakening the US dollar. We had Steve Mnuchin this week saying that a weak dollar was good for trade. Somewhat taken out of context, but when Donald Trump tried telling the crowds in Davos that it was taken out of context, the market didn't act like it believed him at all. And this was really just kind of backing up a comment that Donald Trump said in January, where he talked about not minding a weak dollar. So we don't know if this is the policy of the executive branch, if it's the kind of actions they're going to take. At the end of the day, the Federal Reserve really indirectly controls the direction of the dollar, and data we had today did not really move the dollar in any positive direction, and that is supportive of the euro. This is Bob Iaccino talking euro currency futures from the CME Group trading floor in Chicago.